Hello, let's discuss the various LLC tax classification options that you have, of which there are three. You can do nothing, and in which case the IRS default taxation rules will apply. The second option would be to file a C Corp election, and the third option would be to file an S Corporation election. So let's dive deeper into the pros and cons and the consequences of each of those options. So the first option, to do nothing, the result of that will depend on how many members are in the LLC. If it's a single member LLC, then by default, it will be treated as disregarded entity for tax purposes. What does it mean? Means the LLC's income, deductions, credits will flow directly to the owner's individual tax return, and the owner then will be responsible for paying income tax and the self-employment tax on the entire net income of the LLC, which will be reported on the Schedule C of your Form 1040. So the pros of this method, doing nothing in case you're a single member LLC, would be the simplicity of it. Doing nothing is obviously the easiest thing you can do. The second advantage is you will get pass-through taxation. You will avoid double taxation, which is the disadvantage of the corporate taxation. But with the pass-through taxation, it means that the owner pays taxes on the LLC's income at your individual tax rate. The disadvantage of doing nothing when you're a single member LLC is that all of the net income of the LLC will be subject to self-employment taxes. Another disadvantage is that growth potential can be limited. Attracting investors, raising capital can be challenging if it's a single member LLC. That's not a big problem because you can always change your not only tax classification, but the entity type. You can convert from the LLC into corporation and back if you need at some point in the future. So if your LLC has more than one member, then, and you don't file any special tax elections, you just file the certificate of formation and you don't do anything else, then by default, this will be taxed as a partnership. It means that, again, the LLC will not pay federal income taxes at the LLC level, but instead the profits and losses will pass through to the members, who will then report their share of income, deductions and credits on their personal tax returns. So the LLC must file Form 1065, the informational tax return for the partnership. So this is where you report your financial activities to the IRS. So what's the advantage of doing nothing if you're a multiple member LLC? Well, you get the pass-through taxation. Members pay taxes on their share of the LLC's profits at each member's individual tax rate. The second advantage is flexibility in allocating profits and losses. In the LLC, profits and losses do not have to be allocated proportionate to the actual ownership interest of the members. It can be different percentages of profits and losses, and that gives you further flexibility in choosing where to go for the most favorable tax bracket. So that can be beneficial for tax planning purposes of the partnership, LLC taxed as a partnership. The disadvantage is, again, same as a single member LLC. Self-employment taxes, members must pay self-employment taxes on their share of the LLC's profits, Social Security and Medicare. And again, your limited growth potential here is attracting investors and raising capital can still be more challenging than with a corporation. So how do we get to the corporate tax selection? Well, an LLC can elect to be taxed as a C corporation by filing Form 8832. So when you file that form, by default, the IRS will treat your entity as a C corporation if you file only that form and nothing else, meaning not the other form that you will also need for the S Corp, which we'll talk about later. So you file 8832 to get the status of a C Corp. And what is the advantage to do it this way? Well, you get lower corporate tax rate. C Corps are subject to a flat federal corporate income tax, and that may be lower than your individual income tax rate. The second advantage would be retained earnings. C corporations can retain earnings within the company for future investments, other opportunities. Employee benefits. C Corp has a broader range of tax advantaged benefits that it can offer to the employees. The main disadvantage will be double taxation. Profits are taxed at the corporate level and then again when distributed to shareholders as dividends. And the second disadvantage would be additional paperwork, additional compliance requirements, because you have to go through additional reporting requirements, which may increase your administrative complexity. So once you file the election, then profits annually you file Form 1120, U.S. Corporation Income Tax Return for your LLC. All right, so another thing you can do then is to elect to be taxed as an S corporation by filing not only the Form 8832 that we were talking about, but also Form 2553. And you have 75 days to do it from the start of the fiscal year or from the date of the formation of the LLC. So the S Corps are pass-through entities that offer potential self-employment tax savings because only the portion of income paid to the owners as salary is subject to self-employment taxes. And the S Corp then annually files Form 1120S, U.S. income tax return for an S corporation. So what are the advantages of LLC electing to be taxed as an S Corp? Well, self-employment tax savings. Owners may save on self-employment taxes by receiving a combination of salary and dividends. So that salary and dividend flexibility is a benefit that allows income splitting. Owners can potentially lower their overall tax liability by splitting their income between salary and dividends. What are the disadvantages for an LLC to get the S Corp tax selection? Well, restrictions on shareholder eligibility would be theirs because to get the S Corp treatment, all shareholders must be US citizens or at least residents. And not all entities can be shareholders. They can only have one class of stock, so that can also limit flexibility in raising capital, talking about different classes of shares like voting, non-voting. You can have preferred, common stock, and so forth. All of that stuff can be important for investors. Well, in the LLC that's taxed as an S corp, this is not a possibility. You would have to convert the actual LLC. So the other disadvantage would be same with the C corp election, is that it's additional paperwork on top of electing to get taxed as a C corp. You then have to file additional form, and you have additional compliance requirements. So the factors to consider when choosing LLC tax selection, as you see, they come down to potential savings on taxes when you allocate profits and losses into potentially more favorable tax brackets for you when you retain earnings. You have potentially more flexibility to offer employee benefits and retention by offering competitive tax advantaged benefits. It can help you attract better talent. And also, you need to take into account things like what are your long-term objectives when it comes to raising capital, attracting investors, and how good do you feel about navigating the more and more complex regulatory environment. So hopefully that information is helpful, and best of luck.